Markets come off the day's high with the Nifty trading near the flat line. Metals and utilities lead gains while IT and financials trade soft.
India's #1 e-commerce player, Meesho, sees a bumper listing at 46% premium to its IPO price. The street values the retail platform at over rupees 77,000 crore.
Swiggy floats a QIP to raise 10,000 crore rupees in a bid to arm up for competition with peer Eternal, already well funded. The food delivery to quick commerce player raised 4,500 crore rupees via an IPO in November 2024.
Silver gains 4% overnight to score an all-time high, spelling a gain of 111% in 2025. Copper 2 stamps a new high of around $11,770 per ton, registering a gain of 34% in the calendar year.
Good afternoon. Welcome to Halftime Report live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me are Ekta Batra and Vinny Motiwala. Hey girls, good afternoon. We have come off from the highs, almost closer to the day's low, 100 points off the highs on the Nifty. We are actually below the 25,900 mark as we speak. The mid-caps underperforming as well. Although the advance decline ratio, it is in the favor of advances. So that is something that hasn't happened in a long time. So that is something we'll track closely what happens to the market breadth. The small cap index too is at the day's low. We do have metal index, which is contributing or at least batting it for the bulls. That index is the top gainer right now, 0.7% higher. Oil and gas doing well as well. But PSU banks, IT, all of them under a lot of pressure. And that is something which is important to be track because IT, remember, last week was one of the top gainers.
Hi, good afternoon. Yes, IT was the top gainer in the last week as well. But let's look at, PSU banks, because just yesterday that was managing to hold on to that green or the bright spot when we started seeing in the turbulent time. Today, PSU banks, that's the top sectoral loser. So keep an eye out on PSU banks. We have overall other sectors, whether auto, energy, slight bit of a gain on that front. Sonal already mentioned metals, they're shining in trade as well. And a lot of individual names, when you look at it, Jyoti CNC, Wellspun India, but that's Wellspun Living also, that is managing to hold on to gains. But apart from that, we'll watch out for where the market is headed now.
Hi girls, yes, absolutely. The markets are off the day's high. We have the mid caps which are marginally underperforming as compared to yesterday, where in fact it was quite reverse in terms of the close especially. What we do have to watch out for is that there is that Fed meet today as well. So there is a 90% chance that the Fed will cut rates, and if it does, it will be the third rate cut by the Fed. So that'll be one important factor to watch. And we have India as well as the US. There are talks to take place today and tomorrow. So that is something that we will be watching out for in terms of what takes place with regards to the trade front. A lot of stocks in focus, and we're going to be discussing exactly that. We have Meesho, Keynes Technology, we have Anupam Rasayan, all of these stocks which are in focus. Keynes Technology did see a good close yesterday after positive brokerage notes, but it's coming undone today, so down around 6.5% for that one. And Meesho, we all know, stellar listing for that one. In fact, let's get talking about that. India's largest e-commerce platform, Meesho, has made what is a stellar debut today, listing with gains of over nearly 50-odd%, and you can see that on your screen to its issue price. In fact, our colleague Shilpa did catch up with the top management and began by asking the company's path to profitability and how can they improve their margins. Listen in.
I think on the path to profitability, as we have kind of been mentioning, we foremost focus on free cash flow as the metric that we look at. I think over the last 2 years, if you look at it, we have been free cash flow positive. Last year, we generated close to about 1,000 crores of free cash flow. If you include interest income, excluding interest income, about 600 crores. So I would say that the way we have also built our business has been disciplined in terms of capital efficiency and capital discipline. And I think as we continue to make more progress on some of our monetization levers, be it ads, logistics, some of the new ones that we are working on, we'll keep making more progress towards our other profit metrics as well. I think coming to your question on Valmo, the way we have built out Valmo is to kind of serve one purpose, which is to be the lowest cost provider of logistics in the country to us. And that kind of continues to hold true. So we don't expect, or we don't kind of aim for any percentage number in terms of how much of our volume should go to Valmo or any other partner. I think we're most focused on bringing the cost of serving customers and sellers down every single year, and happens with Valmo, happens with other partners. We're actually okay with both.
But are you looking at, I mean, you did talk about how you want logistics, it to be in-house entirely sometime down the line, where you're controlling all of it. So that's where my question came from. At what point do you see it completely becoming in-house?
So I don't think that we have ever said that we want it to be 100% in-house at any point in time. I think, like I said, the objective function is cost. So whatever helps us bring down the cost, be it Valmo or any other partner, we continue to kind of work with them and broaden the logistics ecosystem.
Okay, so that's the big story for today. To talk more on it, we have with us Utsav Verma, who's the head of research at Choice Institutional Equities, joining in with his quick take. Utsav, hi. Thank you very much for taking the time out. Well, just wanted to start talking about the path to profitability for Meesho now. You are expecting it to turn EBITDA positive by FY27. That's the estimate. Just take us through what that is predicated on. And what are you expecting in terms of an EBITDA?
Hi, thank you, Ekta, for having me. Yes, you're right. We are predicting Meesho to be profitable in FY27. Right. So what we believe that Meesho's improving unit economics and scale advantages underpin a strong monetization runway and a clear path to profitability. The platform itself, it commands 29 to 31% of India's e-commerce print volumes, with NMV expected to grow at 31% year. Now, we have seen that it supports category leadership in fashion, home, kids, wear, and BPC segment. So their acquisition cost continues to decline. Contribution margin is expanding from 2.9% in FY23 to 5% in FY25, and we expect it to reach 5.8%. So logistics leverage through Valmo, fulfillment cost compression, and stable take rates, that is around 30 to 31%, will strengthen profitability visibility. So we are very confident that Meesho is on track for EBITDA break-even in FY27 and with operating leverage accelerating thereafter.
Okay. So, Utsav, do you think a lot of it is already priced in? 60% listing pop. What kind of valuations is it trading at? And would you think one should still buy at these levels?
Yeah, so that's the question on everybody's mind. In fact, we came out with a note only today morning, and our target price is 200. That is, and the upper band was 111. So we expect about 81% from the upper band. The stock may be trading close to 174 or so. So what we did, we tried a number of approaches to find out how should we value a company like Meesho. So first set of peer group is, of course, the likes of companies which are Swiggy's and Eternals of the world, who have pan-India scales and have comparable B2C platform. Second, we compared it with some of the other companies, platform companies, but their business model may be different, say B2B business model, or companies like, say, Urban Company or Trade. Now, when we look at their EBITDA margin and road to profitability and compare it with EV to revenue multiple, we feel that there is substantial headroom, because if we look at FY28 numbers, Meesho is still at 2.4 times EV revenue, whereas when we look at the median or mean of these companies, they will be trading at 4.8 to 5.4 times X. So there is sufficient headroom, we believe, which is there. Additionally, we also looked at when were these companies became or planning to become EBITDA positive, and whether or not they are a cash flow CFO positive or not. With that premise, when we look at it, even at that front, Meesho is just at 5.3 at IPO listing, whereas some of the other companies were at much higher multiple. So we believe there is sufficient upside that is still remaining, and our target price, as I said, is 200 that we have come out with a note today.
Right. Utsav 200, it's already 170 now. So yes, you would still say that someone should look at it today also if they're looking to buy to reach the 200. And what do you think now from here on will be the main growth lever for the company? Obviously, they are in that value segment, tier 2, tier 3 city focus. They have that larger reach. But from here on, what is the growth driver?
So essentially, it's so I believe IPO for Meesho is just the beginning of the large story that is unfolding in India. First and foremost, we have to look at the entire retail business that's there in India. That unorganized is 21%, right? And organized is just 21%, which is going to grow to 34% or so in the next 4 to 5 years, which means a $500 billion opportunity. Now, e-commerce is going to kind of take the bulk of it. And when we look at it, the next 15, 20 crore customers are going to come from this value e-commerce platform. And further, they are going to come from tier 2 and tier 3 cities. So fundamentally and structurally, the new wave of commerce is going to be value commerce, and it will be led by sellers and customers in tier 2, tier 3. And Meesho sits really very comfortably in that Goldilocks situation, along with a tech platform, which is basically driving them through to profitability in very significant and accelerated manner.
Okay. All right, Utsav, thank you so much for joining in with your insights and the outlook on this particular name. A big listing pop is what we've seen today. We'll see which way things go for this stock from here on. We'll slip into a short break. Up next, we'll connect with Vikram Vuppala of NephroPlus. Their 353 crore rupee IPO opens today. Stay tuned for that conversation.
Years of CNBC.
Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, let's get talking about the primary market now. NephroPlus is that 353 crore IPO, which opens today. The company has raised over 260 crores already from 4 anchor investors. To talk more about that, we have Vikram Vuppala, who's the founder and the CMD at NephroPlus. Just to give you some perspective, NephroPlus basically runs dialysis clinics. It has international operations in the likes of Philippines, Nepal. It's looking to enter Saudi Arabia, and its primary market is India. So to talk more about that, we do have Vikram with us in the studios. Vikram, hi, welcome to the show.
Thanks for having me.
The IPO is opening today. You've raked up money from the anchor investors. We've spoken about the basics of the IPO, so let's get down to a couple of details.
Sure.
Just wanted to understand that you get around 40% of your revenue from the international market.
Yes.
And you're looking to now enter Saudi Arabia.
Yes.
Just tell us, is the international market more lucrative in terms of, cost per patient, margins as compared to India?
Yes, India operates at the lowest price point in the world, Ekta. At $22, we have been building this platform, NephroPlus platform, over the last 15 years in a very lean and efficient manner. So we have built the world's best cost structure for dialysis service. Now, 5 years back, we took a conscious call that instead of adjacencies and vertical expansion, we'll do a horizontal expansion. Because even in India, we operate in 25 states and 288 cities, very widely distributed. Then we said, okay, let's go to Southeast Asia, enter Philippines. Then once we are successful there, then we entered Uzbekistan, Nepal, and now we're entering Saudi Arabia. The international markets operate at a much higher price point than India because the per capita income is higher. For example, Saudi is a developed world market, highly regulated market. The price point for dialysis is $240 per treatment. In India, we are operating at $22 per treatment. So when we use this NephroPlus platform in select international markets, the kind of EBITDA margins, the kind of returns that we see are better compared to what we get in India. But let me clarify that India is the core platform. India is the reason why NephroPlus exists, and the engine is built on India. India will continue to grow. International will continue to grow roughly around that 40%.
So you'll keep it at that only, 40%?
Roughly around that. It could be 38, it could be 42, but majority will be from India.
Will this lead to some margin improvement also if Saudi comes and where you are getting better margins? Then what is the margin trajectory from here on, given that you've seen 22% in FY25 is what I'm
Yes, in H1 FY26 audited number, we are at 23.2% already.
Okay.
So dialysis market or this whole business operates at scale. With scale, you get economies of scale, margin improvements, efficiencies. As we increase the scale, regardless of Saudi, regardless of some other country, regardless of our expansion in India, as the volume increases, the economies of scale kick in. It's right now we just crossed the inflection point a few years ago, where now the ROCE profile, if you look at H1 26, we are at 24% ROCE, right? So now as we increase volume, there will be margin improvement.
Okay, so margin improvement right now at 23%. Will there be, you said there will be margin improvement. Is it something that you're expecting every time you expand into bigger markets, more volumes come in? And second part of the profits as well. FY24, you were at 35 crore rupees, FY25 at 67 crore rupees. Is it the growth rate that you're expecting in coming years as well?
So I cannot give any forward-looking guidance, but the way this market works is the revenue growth rate. If you look at historical revenue growth rate, we have grown at 30+%. But the EBITDA historically growth rate is at 80%. The PAT growth rate is at 90-95%. So the way, as I was saying, it's the operating leverage kicks in. So as the revenue grows, and revenue will not only grow with new markets, revenue will grow in the existing markets as well. India will grow for the next 10, 20, 30 years because the diabetes and hypertension, the two major disease burdens, unfortunately all of us are getting into dining out, getting into various 10-minute food delivery, which is going to cause a lot of diabetes and hypertension burden. I would encourage everybody to consume healthy, to exercise, to work out, to reduce the disease burden.
And just for the benefit of our viewers, when you talk about dialysis, it's 3 times a week, at least for 4 hours per session. So
Yes.
that's how difficult a dialysis is. But yes, like you said, it is necessary for CKD patients, etc. But, Vikram, just wanted to narrow down on the expansion plans then. How many clinics are you planning to possibly take over when it comes to private hospitals? Because that seems to be your primary revenue driver in India. So how many do you currently have? How many are you expanding to? And how much are you planning to do in terms of standalone as well as, say, private partnerships?
So in India, we operate in 3 models, Ekta. One is the captive model, which is partnership with private hospitals. Second is the PPP model, which is roughly 30% of our business. Third is the standalone, which is negligible part. India is still not ready for the standalone dialysis market yet. Now, captive will be adding 50 to 60 clinics in India for the longest time because we still own only 10% of the India market. We own 50% of the organized market, but which is totally only 10%. So there is a lot of potential to scale up the captive model. We will be very selective in our PPP contracts. In 13 years of starting PPP business, we have done only 4 contracts. So we are very selective. Every 1 or 2, 3 years, we'll sign a PPP contract. And standalone is very limited. Gujarat has been a very torchbearer in terms of empaneling standalone dialysis clinics, whereas other states have still not roped standalone clinics in. So that will happen over the next 5-10 years. So captive 50 to 60 clinics in India. Every international market where we are, Philippines will be adding 12 to 15 clinics every year. Uzbekistan, we are adding 2 clinics as we speak. So the growth will not only come from new market additions, it will also happen in the existing markets.
What about that revenue per treatment? Is there some price increase you'll take every year, or how does this work? FY25 was 2,274, now it's 2,500 in the first half. So you'll take a price?
It's a combination of 2 factors. One is the inflation of 4% every year that every market sees. In India, for example, you must have seen CGHS price increase happening after 10 years by dialysis price increase by 30%. So there will be a one-off price increase and other contracts have a 3 to 4% inflation. Then the international mix, the percentage of revenue coming from international, when that is adding in, it's coming at a higher price point. These 2 factors are contributing to the 10% 9 to 10% inflation.
Okay, all right. Pleasure speaking with you, Vikram. A lot more questions, but you are out of time. But we'll take it up when you list on the exchanges. So we're waiting for that day. But thank you so much for explaining the business to us.
Thanks for having me. Thank you.
All right, with that, we'll slip into a short break. When we come back, we'll get you more on the markets. And Mangalam Malu will join in to focus on the F&O setup at noon.
"26 years of CNBC TV18.
Welcome back to Halftime Report on CNBC TV18. As of now, the Nifty is down almost 25 points in the trading session, almost near today's lowest point, right? Opened up on that positive side, but then we did see a fall coming in. 0.1% of decline, 25,800 is what it's managing to just hold on to. Banks, IT is not supporting in terms of a move as well. Both of them are down 0.4%. But what's happening in the world of F&O? Let's go across to Mangalam to understand what we're keeping an eye out on. Afternoon, Mangalam.
Good afternoon. So the indices have consolidated after, bouncing off lows yesterday. Currently selling at the highs is something that we've been witnessing. So the Nifty Bank, as well as the mid-cap index, all of them currently, as we speak, in the red, mildly for the Nifty right now. And the other thing that I will monitor as we move towards the end of trade is how the advance decline pans out. Because for most part of yesterday, the advances were a lot higher than declines. And today as well, that is the case. But do the lines converge, and at some point, do the decliners go ahead or not, is where we will see, the next course of action coming in for the market. That's point one. The second point is Reliance. Nifty is, not falling as much as the Nifty Bank and the other indices because Reliance is holding up well in today's trading session. So how that stock performs going forward is something that will determine the course of the market as well. But for all technical reasons, the Nifty seems to be in a bit of a 50 DMA, 20 DMA sort of range. Yesterday, it ended, it tested the lower end of the range, which was closer to the 50-day moving average. This is about 30, 35 points away from there is where the market bounced. And the higher end today is 26,029, which is the 20-day moving average. Today, it saw supply as we move towards that 26,000 mark as well. And that's where the markers have been placed by the option writers. So if you look at either, the straddle at the 25,900 mark, be the 25,900 call or the 25,900 put together, there is a premium of almost 170, 180 rupees available on that one. So 200 points on either side of 25,900, which is 25,700 to 26,100 is the broad range. Or if you want to further corroborate that, you look at the 26,000 call as well, which has seen a fair amount of writing, and the 25,800 put, which too has seen a fair amount of writing. You adjust the premium and you will get this 25,750 to about 26,050 sort of range, which again coincides with the 50 and the 20-day moving average. Individual stocks, there the action is very interesting because we aren't seeing big long positions being added or big short positions being added. A lot of the movement is because of the existing positions being unwound, either long or short. So on PB, FinTech and delivery, we are seeing long positions being unwound and some longs added on AUSFB. So that's another stock I will be monitoring very closely.
Okay, all right. Thank you so much, Mangalam, for joining in some of these stocks which will be on our radar as well. We'll slip into a break. When we come back, Vivek Iyer will join in and we'll focus on the stocks that are moving around in trade in the broader markets.
"26 years of CNBC TV18.
Welcome back. Let's get you an important voice from the commodity space. May Layton of Citi says they are now neutral to bearish on gold for the next 6 to 12 months after being bullish on the yellow metal for the last couple of years. He tells my colleague Manisha Gupta that gold could further decline to $3,600 to $3,800 an ounce by the end of 2026 as the US economy picks up. Listen in to the slides of this conversation.
By the second half of next year, as US growth sentiment and actual growth improves in our base case scenario, we do see gold getting down to around that $3,600 to $3,800 mark by the end of 2026. Having said that, that's our base case scenario. We put a 50% probability on that. We actually put a 30% probability on the bull case, which is higher than normal. We put a lower than normal percent on the base case, and that's to reflect the fact that this gold buying could continue at super high run rates despite an improvement in the US economy. It could easily be the case that pension funds, asset allocators want to shift away from sovereign debt towards gold, that, you've got all these new avenues for people to buy gold. And it's entirely plausible that a very small wealth shift continues into gold, and that, the market's just too small, as we've seen this year, to handle small wealth shifts into gold. So we put a 30% probability on the bull case scenario, which is that people just don't really mind about the level of the price being at 55-year highs. They're not concerned about valuation, and they just have to have it as part of their portfolio. And in that bull case scenario, we calculate that gold is going to go up to 5,000 by the end of the year and 6,000 by the end of 2027. So we're kind of, it's very difficult to call up here at these, outrageously high prices. I think Gundlach, a famous investor at Double Line, he said that we're at nosebleed levels in recent weeks. And I can agree with that when you look at a 50-year chart.
Oh, well, yes. Max, and that's about gold, but let's talk more about silver now, because we've seen the prices double onto this one. I mean, I remember talking about $50 an ounce with you as well. That was taken quite successfully, and we seem to be trading around and above those kind of levels. With the kind of fundamentals that we see for gold, add to that the deficit and the industrial demand, and you have a bull rally continuing in case of silver. But are we done here as well? Because various other banks are now putting out 60 and 70 and perhaps 100 in next 3 years. What are your scenarios playing out like?
Sure. So our baseline view is that silver outperforms gold. Well, it's actually been outperforming obviously over the last 12 months, but we think that will continue over the next 6 to 12 months. We've got silver. Its next move we think is still up to 62, and in the bull case scenario even as high as 70. So we continue to like silver. It's a little bit more growthy, and we think we're over the next 3 to 4 months we're kind of transitioning away from the bearish impact of some of President Trump's reset related policies towards a more bullish growth scenario. And we're already seeing that the kind of investor money, I think, at the margin shifting a little bit from buying gold into silver, copper, aluminium, the more growthy metals, even the PGMs. And I think that continues over the next 3 months. So we think silver's got another leg higher in it yet.
You talked about the PGMs, and that's a chart in front of you. You have platinum, palladium up by 70 and 80%, and then copper has hit an all-time high this year as well. Are we looking this growth continuing? What is your sense on these?
Yeah, so the PGMs are being impacted kind of like copper and to some degree silver earlier this year especially, but the PGMs are still being impacted by the prospect of Section 232 tariffs being put in place. We could get an announcement, or on paper we should get an announcement on whether they will attract 232 tariffs over the next 5 to 6 weeks. Should happen by mid-January according to the executive order. So if that happens, you could see COMEX PGMs prices increase by as much as 50%. So there's still, certainly we like palladium on COMEX. It's our base case scenario that there is a major tariff put on palladium through the Section 232 process. And on top of the fact that people are concerned that there may be tariffs or expecting that there may be tariffs, and that presents upside to the price. While that happens, traders are incentivized to shift physical PGMs into the US to get exposure to those potential tariffs. So that is tightening up the ex-US market for these metals, and we expect that to continue in the near term. So bullish near term, 6-12 months, it's a little bit more difficult. They've had fantastic rallies, and there is some investor portion of it, and once the tariffs are in, we think there will be some easing of the balances. So, yeah, probably neutral to bearish on a 6-12 month view, but only after a very bullish period for the next month or two.
"26 years of
Welcome back. Well, we do have a lot of stocks which are buzzing today, though the markets are a bit subdued at this point in time. We have the Nifty, in fact, which is down almost around 60 odd points. We have Wellspun Living. That stock should come up for you. That stock is gaining around 7 odd % in today's trade, so doing well for Wellspun Living. We have MMTC also, which is not doing too badly. So that stock is up around 5.5 odd %. But far cry from its 52-week high of around 88 odd rupees. Balrampur Chini also showing some amount of traction, so up around 5.5 odd % for Balrampur Chini. ESAB India is the interesting one because that one is quite close to its fresh 52-week high. It's just about at around 6,141 odd rupees, but the 52-week high stands at around 6,400 odd rupees. So that stock doing well in today's trading session. Just keep your eye out on a stock such as Jyoti CNC as well. That one's doing well, up around 5 odd % for Jyoti CNC as well. So that's what the market is looking like at this point in time. Maybe we need to take a we need to go across to Vivek now, who's going to join in on all the buzzing stocks that he's looking at in today's trading session. Vivek, what's on your list?
Well, thank you so much for that. You know, what's actually transpired over the last half hour or so is that the market breadth has significantly worsened and selling pressure, especially among some of the names that saw some recovery today, that's not held on to. And market, in fact, especially a name like Keynes, the EMS plays, all of them seeing selling pressure. But a whole host of stocks doing quite well. Hopes of a likely trade deal, that's ensured that some of the exporters are doing well. So Wellspun Living is something you just alluded to. Good volumes today, top NSE 500 gainer. Have a look at Hindustan Zinc. It's seen as a silver play. That particular stock has now surged to record highs, almost 4.5% higher today. AU Small Finance Bank, the company has got the nod for the increase in the FPI limit to 74%, which is the highest permissible FPI limit as far as the bank is concerned. So that ensures that, the stock will see a weight uptick as far as MSCI and FTSE is concerned. All of the listings today, despite the weak overall market, especially look at Meesho, Equus, as well as Vidya, all of them have seen a positive pop. Meesho higher by over 50%. And select insurance stocks after the recent sell-off, some of them are doing quite well. In fact, ICICI approved, significantly outperforming higher by 2.5%. On the other hand, quite a few laggards as well. Can't look past gain, almost 7.5% lower after the close to 15% uptick we saw yesterday. Eris Life Sciences, that particular stock amongst the top gainer laggards as far as the NSE 500 is concerned. Paytm, it's one of the strongest selling pressure that's seen today in this particular name, especially in the F&O pack, almost 2.5% lower. And BSE, over the last 2 to 3 trading sessions, this stock, which was holding on, is seeing selling pressure emerge, almost 2.5% lower as far as BSE is concerned.
Okay, all right. So some buzzing names in the broader markets. Thank you, Vivek, for joining us with that list. We'll slip into another break now. When we come back, we'll get to more on markets and stock-specific action. Stay tuned.
"26 years."
Welcome back to Halftime Report at CNBC-TV18. As of now, when you're looking at it, the Nifty has moved almost near the day's lowest point again, 25,790, so below the 25,800 mark. Nifty Bank, Nifty IT, the top sectoral losers. The broader end of the market also is not managing to hold on to any sort of a gain. There's a sharper fall that's come in the broader end of the market today. So Nifty Mid Cap is down 0.4% as well. Nifty Small Cap of 2 is trading with cuts of almost 0.4 to 0.5%. So that is something that we'll be keeping an eye out on in the trading session. And advanced decline ratio, let's watch out for that. As of now, we're seeing almost both of them slightly bit more in the favor of declines versus advances. So that is what we'll keep an eye out on. But with that, we're absolutely out of time on this edition of Halftime Report. Thank you so much for tuning in. Up next, Business Touch.
"26 years of CNBC-TV18.